Happy Tuesday, everyone. This morning price opening up once again at Fibonacci reversal zone where price had been dancing since Sunday. What is the problem this morning? Buyers remain pretty darn weak. We are on standby. This bright pink line identifies bullish weakness across the board. We've been here for the last 50 minutes. Knowledgeable trader who separates strength from weakness knows extremely well what he is monitoring for. Yesterday morning bullish rally skyrocketed as expected from trend inception until this end of minor trend where S&P sold off in European session. This is where market opened up, testing us to the core. If I convert this chart to one, take a look what played out in the market. Ultimate chop, ultimate pain, ultimate meaningless corrections. What an open! What a test of your knowledge! This is market open, last 50 minutes. This is proprietary Fibonacci tool that identifies trend inception levels. This is the reason I named this level reversal zone. When price comes to this level, expect reversal 80+% of the time. But only if rules are met, you can take a trade. Buyers remain pretty darn weak. Knowledgeable trader knows that. This bullish pullback's non-stop. Market in a whole lot of pain, just like yesterday. Price is doing exact same thing nowadays on multiple instruments. On Nasdaq weekly for the last 5 weeks. On Amazon daily for the last week. On Netflix for the last 2 months. And again, just a reminder where Netflix sold off from. Fibonacci reversal zone. As expected, despite spectacular earnings. However, take a look what played out at the end of the minor trend, taking Netflix weeks to break through. Sellers were weak for almost a month. So, what is the basic rule in the course? When price comes to Fibonacci reversal zone, monitor for reversal, no matter what you trade. Do not ever acquire trade into Fibonacci level. Trade from level, never into level. It's all exact same formula, no matter what you trade. Netflix frozen in pain, just like S&P this morning. To the tick. Buyers remain worthless. Market in pain. We're sitting at reversal zone in massive correction. Knowledgeable trader knows that. Knowledgeable trader only interested in reversal. Only if you play by the rules. Only if you have viable strategy with proper execution, you will succeed. Only if you separate corrections from reversals in the market, success is possible. And that's how Fibonacci keeps you out of trouble, no matter what you trade. Simple. Learn the strategy, identify what you want to trade. Do you want to be a day trader? Do you want to be a position trader? Formula remains the same. The only difference, risk management and trader psychology. Will buyers finally pick up this steam, or will this bullish action remain meaningless? As this bright pink line identifies bullish weakness, just like on Netflix, just like on Amazon, just like on any instrument you trade. And just to remind you, our market sold off last week. In case you missed the videos last week, please browse YouTube channel. This was S&P last week at reversal zone. It's all the same. And the end of the minor trend been present in front of you for weeks, where S&P sold off from. So as we're dealing this morning with trend inception, the problem is buyers are extremely weak, and this Fibonacci resistance showing to us how to separate strength from weakness, how not to get chopped up in this market. Here are multiple other reminders from the trading room from the past. Here is Euro. This was a channel on Euro daily. Multiple students trading Euro. Euro danced at ultimate support at the end of the minor trend and key target for months. Here is Pound Yen weekly. Collapsed from the end of the minor trend. No surprise. Here is exact same thing on Apple. Do you remember Apple being frozen at this level? The entire most of 2017 and half of 2018? No surprise whatsoever. And please take a look where Apple skyrocketed at 91. Here is exact same example on Amazon. Pain and torture for weeks. It's all the same. Here is Facebook. What a pain. Separating the end of the minor trend from major trend is a key. This bright pink line identifies bullish weakness. If you're an investor who is holding Facebook for weeks, months and years, you're trading weekly. If you're an investor who is holding Amazon, you're trading weekly. Knowing what to monitor for and how to separate the end of the minor trend from major trend is the key. Finally, Apple broke through 181 and skyrocketed further up, as expected, which is what price does time and time again when trend becomes major. As you see very clearly, 194 and 214 next. This is Apple now. No surprise. Ultimate resistance became ultimate support. This is what we're monitoring for right now on S&P. This is your investment decisions. Reminding you, Fibonacci is the only natural predictive tool in the markets. Everything else artificial, everything else delayed. Apple broke through the end of the minor trend and skyrocketed as expected. No surprise. Will S&P do the same? We all will be so much better off. Pretty please, start showing the power, not the weakness. This is what knowledgeable traders are monitoring for. Knowledgeable traders are not babysitting corrections. Knowledgeable traders are not getting chopped up in corrections. Knowledgeable traders separate strength from weakness every day, every time. Buyers remain pretty darn weak. And that's the power of the price and Fibonacci. And that's how you stay out of trouble, no matter what you trade. So again, we've been here for over an hour, traders. We're dealing with worthless buyers, market in massive chop. Fibonacci once again keeps you on the right side of the market. Price is frozen in massive correction at key support. We have zero interest in weakness. We have all the interest in powerful reversal. Price can dance in this chop for hours, days, weeks. We have zero interest in chop. We have only interest in meaning. More than an hour later, we are monitoring for power of the buyers. This Fibonacci resistance kept us on the right side of the market. This Fibonacci level shown to us how weak the buyers are, as we've been frozen at key support for over an hour. Will bullish rally finally start, just like it did yesterday? Let's certainly hope so. We are on standby for power, not weakness. Every single thing you see in front of you is proprietary. 30 plus strategies later, 10 years later, I prove to you every day that market is flawless Fibonacci puzzle. Simple. All you have to do, play by the rules. Buyers remain weak, we are out. This is holding the key moment on S&P. So if you decide to join us, simply click on Learn. And if you would like to join us on group course, simply sign up on the website. Group course 8 weeks, private mentoring 16 includes all group classes. I'm with students 4 or 5 days per week, starting with 9:15 EST, with guided live trading, with key classes on Monday and Friday. Unless, of course, I travel or there is a major holiday, we shift classes around. Monday, Thursday, not a problem if it's long holiday weekend. Money management, trading psychology is a key. When I work with you one-on-one, I log in into your computer, you log in into mine. I set up Ninja Trader for you for your charts to look like mine. But pretty please do not sign up for private mentoring without speaking with me first. Group class only $29.77. Private mentoring is $79.77. Group course 2 months, private mentoring 4 months. You can extend up to a year if you'd like to take time off. After graduation, you have absolute opportunity to continue with all the classes at the minimal fee if you like. Please, never hesitate to contact me 925-257-4298 or info@fibainstitute.com. As market remain in pain, hour and a half later. Once again, knowledge of price action and Fibonacci kept trader out of trouble. It's all the same formula, no matter what you trade. All you have to do, play by the rules. Simple. Look forward to seeing you in class.